Hello everyone, this is Juan Sarmiento and today is Thursday, September the 3rd. Okay, so everything is good here. Today we have a little gain. Obviously, the reversal in the market, we were making money on the upside, so now it has reversed, so we have to lose a little bit. But as the market continued to go down, volatility will pick up even further. That is, if you believe the market will go down. If it reverses and goes higher, we're fine too. But this looks pretty bad when you say a reversal day like this, big drop that engulfs several of the previous days. That implies a reversal in the market. And that tends to increase volatility. Let's look at the VIX here. And we have a spike in the VIX, and that of course favors my trades. So let's go one by one, starting with Apple, big drop. It would have been nice to have sold some calls yesterday, but so big deal, no matter. That does not hurt me too badly. And what we can do now is we have here a September the 4th put that is expiring tomorrow. What you can do is assume that it will expire and tomorrow you just sell puts for the next month. But because we don't know what is going to happen tomorrow, you could wait until tomorrow and then see how much room there is for you not to have to close this September put and just sell next month's put. Or do what I am actually going to do, which is to buy back those 4 puts and sell the next month's put. Or wait until tomorrow and do the selling of the October puts only. Okay? Since I don't have that luxury, I only trade once a week, and that is the bottom line here of this approach. I'm going to do just that. Okay? I'm going to do the rollover. It's called when I buy back the short front month and sell and the next month, in this case October the 2nd. I did that with a call already, you can see that here, so I'm going to do that with a put. Okay, so let's do that. And doing that it's going to change my trade to look more on the positive side, but volatility is where we are going to make our money. Okay, so let's do that. Confirm and send. And we wait until it gets done. Let's go to the next one. Oh, it got filled already. So let's go to Apple, and this is what we have right now. All right, it's delta positive, so if Apple for some reason goes up again, I could make money on delta, but Vega is positive, so a continued decline would increase my Vegas and make me more money. Let's go to ATVI, and in this case, I don't need to change anything. My shorts are due to expire in October the 2nd, so I'm leaving that alone. Okay, so you can see that's a perfect Genie trade with the front month short and the back month long, both calls and puts, and in the form of a straddle. And of course, the back month is richer, and that means that the puts are going to appreciate. And ironically, you would see this curve go up and give us some more room and further profits. So that's what usually happens. Let's go to Costco. And here again, this expires September 11th. That's next week. If you say add simulated trade, you see that the position here is 8 days to expiration. And you see that Costco is a big engulfing, so you can expect also continued decline. If you say analyze trade, let's go to the analyze tab. The risk graph, that's already negative. Okay, so we could let it be and see what happens next week. If the price is way up here towards the upper end of my cone, you can wait closer to the next week. You only do the rollover if you are somewhere in the middle. Okay, so I'm going to let it be. And notice how this call, I had already done a roll-up because we had 4 long calls with a 325 expiration. What I did was I sold 2 of those and bought at a higher strike price. In that case, gave me the negative delta. Okay, so that's a transformation. It's a way to take profits and then turn it delta neutral. As the stock goes down, then now it's become delta negative. Okay, we can do the rollover on the call side and not on the put side. Let's do that. Let's try that. Analyze rolling. With 8 days to expiration, I go to the next month up, which will be October the 2nd. And I'm closing the 325 call on September 11th to October the 2nd. And doing that gives me a credit. And also it turns my deltas into positive. Okay. And so that means that if the market goes up again, I'll be fine. If it goes down, volatility will pick up even further and give me additional profits. But what I'm doing here is taking some money off the table, getting some credit. So let's do that. Confirm and set. Facebook. Okay. Facebook, I have this September the 4th at 2:55 that is expiring tomorrow. And so I'm going to do the same as I did for, was it Apple or which one did I enter? Yeah, the same thing I did with Apple is to do the rollover. And doing that will lower my deltas or reduce my deltas. Right now it's 17, it becomes more neutral. Okay, so let's do that. And that gives me $681 times 100 is $681 credit. You can see that we have a put here that was left over as a lottery ticket. Who knows, that might be even begin to appreciate. But I'm going to get out of this. And I'm going to adjust the value to make sure that it gets filled. It did get filled. I still have one position, one trade active on Costco. It should get filled. I'm asking less than what the market would bear, so we'll see. MNST, another big reversal day. I think that's significant. Let's go to the Analyze tab. And all I have here is a lottery ticket left over from some other time. But right now that's worth 0, so I'm not going to do anything with it. Microsoft, same thing. It's a lottery ticket, no need to change anything. This is left over from another trade, a Genie trade that I made adjustments and eventually I didn't bother changing that put. Well, if Microsoft was to drop another 30 points, suddenly that would become interesting, wouldn't it? Let's wait and see. Okay, let me reset here. Sorry, reset slices. So yeah, we are right here. That looks really, really good as it is. September 25, there is plenty of time to expiration, so we don't touch that, even if it has positive delta, because if the market continues to go down, we may end up here at the cone and the volatility is spiking a little bit, would be more profitable. So that's in good shape. Same with Oracle. We are here near the cone and the cone might turn out great. September 11 is the expiration. That looks negative. Wait a minute. They have 9/10 is next week. There's an earnings on Oracle. So that makes me think that I should close it. Let's give it a chance, okay? I'm going to look at this on Thursday again, next Thursday, and perhaps I'll close it before that. All right, so now we have PayPal. I see that we have also the put expiring tomorrow, so we can do the same as we did with Apple and Facebook. take a little credit, and that will neutralize, make my delta from negative more positive. And again, this is a way to take profits, and the trade is actually now bullish. But you have to think about, if the market continues on down, volatility will increase on that. UPS, this is, yeah, again, I'm not going to touch this. That's doing great. Okay, that's it. You go very quickly through them, see what needs adjustment, get some money back, and that will allow you to enter new trades. There is no trades to be entered now, and I would caution that this is no longer the time to enter any trades. Why? Because volatility is high right now. With this spike in volatility, you run the risk that the volatility would collapse and make all your trades, new trades, suffer. So we just wait until this is adjusted, and then when volatility decreases, we will have plenty of candidates to enter. That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.